Seasonality, I think seasonal this year is going to be a roadmap. The only difference I have is that typically corn peaks in June. I'm pretty skeptical heading into that March 31 stocks report this year. Because of the price discrepancy, we've already seen information out of Informa, we've seen information out of other analysts that have seen the model income-based acres projections. Corn's still carrying such a premium over all other commodities that I've got to believe that that's a big risk, is carrying a lot of unpriced new crop grain into that March 31 stocks acres report. So anyway, I'm not really bearish old crop corn. As I kind of said, I'm not overly bullish, but I'm not that bearish it. So I kind of think you could see old crop corn kind of stabilize and maybe even trend a little higher. We hope that brings December up, that 20, 30 cents to start marketing into that and really get some good prices as we go forward. At least get something on the books. Because I think that the difference between this year and the seasonal pattern is that typically what that's showing is that the valleys down at the end of the marketing year are about where we start the year out. I think the valley next year is going to be significantly below where it is this year, where we started where we are today. So I do think we'll probably keep relatively firm prices into the spring, and then once we get, I don't want to think what happens if we get a dry spring and get a few timely rains after a planting season. It's going to be a quick beeline lower. And again, I'd love to thank the USDA for giving me such an exciting report to come up and do a bunch of marketing meetings. That's really, it's really what I want to come and say. Corn's got a 50-cent trading range for the rest of the year, but that's unfortunately what we've seen is about a 75-cent range. For the broad base, since May of last year, we had that peak as we were very uncertain about production levels this summer. But you can see, generally speaking, we're trending about a 75-cent range. I still think that holds. I don't think it goes lower. I actually think it stabilizes out, and maybe you're about that $6, $6.75 mark here for the foreseeable future in the March corn or the nearby corn charts. All right, let's look at beans. And I hope that the message that you take away from this isn't that I'm that bullish in new crop beans and that I'm projecting an 82 million bushel carryout. But if you're robbing Peter to pay Paul, something's going to have to give on the acres thing. Now we do have some CRP acres expiring, and I still think that we're not going to lose a lot of beans. But you can see the middle column shows at 74.5, losing about 500,000 acres from last year. Full-fledged demand. I'm increasing demand 200 million bushels in this projection. That's taking exports way back up to up 225 million bushels, and that obviously has something to do with what's going on in South America right now. If you take that up, that 200 million bushels, those acres and that trend line yield still gives you a very adequate supply of beans next year. What does get more interesting is that if you do start to see a deeper cut in planted acres this year, if we do get a dry spring, I would think that a dry spring would be supportive of the bean market, because you're going to really see that last million and a half acres go from corn back into beans. So, I'm showing an 82 million bushel bean carry out. I'm showing a 2.5% stocks use ratio. That's not very realistic, but bottom line, you could see that March 31 stocks report kind of tighten the bean balance sheets a little bit, knowing what we know, something like that looking. I threw this in because I wanted to show the difference in soybean versus the corn seasonals. I don't necessarily think this is what this year's bean seasonal looks like. But what I wanted to illustrate here, I kind of think this is neat, is that you look at early December, you've kind of got wave one of a rally. And then you look at like May into June, you've got wave two of a seasonal rally. And that is the impact of what now a dual hemisphere growing season has. We've got a winter weather premium and a spring U.S. weather premium. And I think that's kind of an interesting chart that shows that. Again, I'm not overly bullish beans saying they're going peaking in June necessarily this year, but the seasonal pattern has been pretty amazing over a 10-year period that you do tend to want to peak there. One reason why I'm not that bullish heading into June is that one of the reasons why you peak in June, not only because there's a lot of weather issues, is because typically old crop beans are in short supply And so they're racing higher in that June timeframe and really have a very strong seasonal peak out there. I'm not bullish old crop beans, as you've heard. So that alone probably takes that top end off of that June seasonal this year. So typically I'm a big seasonal person, but I don't know that the bean seasonal necessarily is something that looks like this. I threw in the technical corn chart, or bean chart, just for illustrative purposes, but I really, putting this together, almost forgot the beans were at $14.75 just a few months ago. And it's almost amazing to think that we lost $4 a bushel from September until December this year. But what I would show you is that the $11 to $12 or $12.25 mark that we traded in the last month and a half is probably your trading range for beans. Again, beans are going to follow corn. If corn's in a 50 to 75 cent range, I think beans are going to be in that that $1 to $1.25 range. So unfortunately, there's just not a lot of excitement again in there, and we're probably going to see stagnant price action here for the foreseeable future. Now I will leave with one thing, that this is the weather risk this year. And I'll also bet you that not many people would have guessed this situation here. But what I'm showing on the left is percent of normal precip since December 1st in the Midwest. And on the right is percent of normal temperature since December 1st. What you'll note is northwest Iowa northwestward has been abnormally warm, and the whole Corn Belt's been abnormally warm, but specifically Iowa northwestward. Parts of the Dakotas are running 12 to 14 degrees above normal right now. For a 6-week period, that's an incredible stretch of time like that. There's almost no snow covering anywhere right now. The hardest decision we've had is, where do you go to snowmobile? And what's interesting though is that you look at the percent of normal precip. I don't think most people would have probably thought there's that much of an area that's actually above normal precip in Iowa this year. Yeah, there's no snow cover, but not an awful lot of rain. You just don't think about, 1 inch of rain is typically about 8 inches of snow. So I mean, it's a pretty significant situation. Look at what's happened in this area that's been real dry last year. You get into the Kansas and the Oklahomas and even in the Texas areas, they've finally gotten much above normal precip. Finally, because they had one of the worst droughts they've ever had last summer. But what I am cautious of is that this dryness begets dryness situation. And you see the creep. The weather forecasters like to talk about the drought creep. Last year it started in Texas and kind of crept into that Kansas, Oklahoma area. This year, is there something that's starting in the Dakotas that we need to be careful of as it kind of stretches itself into Iowa? Now, I tell you that most forecasters today don't think that it's a real dry situation in February and March, but nonetheless, it's something to definitely watch out for. Traders generally think that hot, dry winters lead to hot, dry summers. I don't know that there hasn't been, in my opinion, a great correlation between the two. That's what the market thinks. So, maybe that's enough. We can keep this dry concept that they'll put, get us enough that get that 30-cent premium in new crop corn